The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I would like to start out the show by recommending everybody get out their wallets and checkbooks or credit cards and spend $20. The 48th edition of the Stock Traders Almanac is now out, published by John Wiley. It's done by Yale Hirsch and his son Jeff. It's been going on for, well, like I said, if it's the 48th edition, it must be 48 years. It has more information about stock trading than you're going to get than any other book. Specifically, it talks about the January effect, when it starts, what it means. It talks about the Thanksgiving Day break and all of these things, the different seasonalities that are there. It talks about Gerald Loeb's Battle of Investment Survival that Warren Buffett lives by. It's got some wonderful statistical information on days of the week, days of the month, days of the year. But the real value, in my opinion, is it gives you all the years of the presidential cycle. Going back, we've had, 46 presidents or something like that? I'm not even sure. So that goes back, quite a few years and shows the stock market, during those presidential years to show when it works and when it doesn't. So it's really a great book. It's called the Stock Traders Almanac for 2015 from John Wiley by Yale Hirsch and his son Jeffrey Hirsch. It's really a fabulous book. This year's book is dedicated to my friend Larry Williams, who's done a great deal for increasing in education among traders on a worldwide basis. So I really recommend this book highly. It's got so much information in it. Not only that, it's your own calendar. It shows all the dates of the reports, and it's really quite a good piece to have on the. In the market. I'm sorry for my laughter, but someone said, does it have a chapter on how to become a crony capitalist? And I don't know if anybody knows how to do that. I think what you have to do is spend about 10 years with either J.P. Morgan or Goldman Sachs, and then maybe it'll work out. Well, I'm going to start the show today with a chart on something that is going a little bit south. That we've been talking about a while. That is the junk bond market, folks. We mentioned this, way back in November, the fact that it was far weaker than the rest of the market, as opposed to the Treasury bonds and Treasury notes, the Class A stuff, as opposed to the junk bonds. And you can see now the junk bonds have broke down, very, very badly since the October 15th high. It's dropped, a great deal, telling us that we're most probably, looking at some type of a real big shift in safety among some of the things that we have going on in the market. Now, the next thing we want to take a look at, if we're looking at junk bonds, then we really need to take a look at what's happening to the 30-year Treasury bonds, and this is what Basil was talking about before. You'll see that, we just made a retracement with an ABCD pattern, Gartley, this morning in the 4-hour chart. We got up to that 144.16 level. We've since broken about one full point in bonds, which is $1,000, which is a considerable amount. That's most probably related to the flight back to risk on in the stock market. But we will see, what that really means. When you have a market that rallies like this very, very quickly, folks, that's usually not a very good thing from a technical standpoint. What we'll do here is we'll take a look here at the VIX index, who no one knows this index better than our good friend Basil Chapman. And I wanted to bring this up to show you how he talks about this, but nobody really pays that much attention to it. I started doing it, quite a while ago. But if you'll notice that it went right at yesterday's high in the VIX was exactly a 382 retracement from the high from October 15th. That's a pretty significant spot. Well, we've got our first caller today. We've got our friend Brent from California. Brent, are you there?
I am, Larry. I'm in a very heavy rainstorm at the moment. So.
Well, you're lucky. It's snowing here.
We definitely need it. So it's a welcome storm that we definitely we need to get as much as we can this year. So.
For sure.
I'm glad that you're in there today. You actually sound pretty darn good considering what you've been going through. So.
Yeah, I'm better than I should be, but not as good as I could be. That's what that's what they say. So we'll see. You have a question on gold, my friend?
I do. It looked like we went down to that 382 retracement this morning and kind of bounced off that. I just wanted to get your thoughts.
Well, Brent, you have it spot on. We had the big move up in December where we rallied to 80 points in one day, $80 an ounce. Then it took 6 days to make a 382 retracement. The market dropped $34. And today, from the low we made on December the 7th, we went up, made new highs at 1240, 1239, and then today's low was an exact 382 retracement, which was also $34 down, and we've had a pretty good rally. The question is whether this 1218 level is going to hold. I think it's got a pretty good chance. What's really amazing to me, Brent, is the fact that silver just will not give up anything. I mean, this is appearance of someone that is trapped on the short side of silver that's trying to get out and is not able to because there are no dips to get out on. Even when they have a dip, it comes back so quickly you don't even realize it was a dip. So that's indicative of a real problem on a possible short squeeze in silver. I don't know if it's going to happen or not, but you realize that, in the last 10 trading days, silver has rallied $15,000. That used to be a year's move.
So I talked to you that day that it made the big move, and I did get to hear the story related to Basil about your friend missing it by 2 pennies on his buy order at around $15.
Yeah, he's still in therapy.
Well, I appreciate it, Larry. I just wanted to get your thoughts on it, and we'll see how it acts going forward. So.
Well, thanks. We appreciate your call, and we'll have Rich Anderson on at the break from Anderson Capital Management to talk to us about some of the commodities and grains and stuff that's going on. But I don't know. I know you follow the currencies too, Brent, but, the real amazing thing to me is, and it doesn't get a whole lot of press, is the fact that we've had a $5,000 move in the Japanese yen U.S. dollar. It's had a move of over 300 pips to the downside and another 200 pips rally to the upside. So we've had a 500-point pip move in the Japanese yen in 4 days. That's a tremendous amount of volatility, and I think it tells us that we've got more things coming.
Volatility in the currencies and the commodities, so and in markets in general. So it's getting interesting out there.
This is ideal. Like they say in the Chinese curse, may you live in interesting times.
Absolutely. Well, you take care of yourself, Larry, and thanks for being a trooper and coming in today and giving us all that great information you give us every day. So,
well,
you take care and have a great holiday if I don't talk to you.
Okay, Brent. Thanks for calling in. We really appreciate it. Okay,
all the best to your family.
All right, pal.
All right, take care.
You bet. The silver chart is just even more bullish than the gold chart. It's basically doesn't back off nearly as much. And as I mentioned to Brent, that has some indications that there could be a short squeeze in silver. There has been somewhat of one because it's moved in 10 days. It's moved $15,000. And we haven't had a move like that in a very long time. It's well over 2.5 years since we've had a move like that. And that's when it was trading at $49 an ounce and not at, $15 or $16 or $17 an ounce. It's still very overbought up in here coming off that bottom 10 days ago. It'll be interesting when we do get a pullback, what it's going to look like. The one we had today was expected because it was exactly like the one we had previously in gold. It was exactly, $34 per ounce to the downside. And in silver, it wouldn't even back off, would not even back off very much at all. So we'll have to wait and see. We've had a question about one of the things that we follow, and that is the natural gas contract. And we're watching that real closely because of the fact that we've got a chance here for the natural gas contract to make a double bottom. It's got to come down about another 10 cents, down to about 3.63. And then I think it's got a chance to make a double bottom down at that area. At that point, if it made that, it would be making a 3 drive to a bottom pattern, which is one of our favorite bottoming patterns and topping patterns that we see. So that's the main thing that I think we're going to keep an eye on. With that, it's very, very interesting. Okay, now one other person has a question. I can't answer this. The question is answered. Where is Apple going to be in 3 weeks? Oh, wait, it just came to me. Apple is going to be trading in 3 weeks, which will be January 9th, at 104.26 at 10:30 in the morning. That's what my Ouija board just came up with. Folks, I have no idea where these markets are going, but nobody else does either. All I do is look at these patterns. Sometimes they work, sometimes they don't. That's all it is. You know, you can't say where the market's going to be in 3 weeks. Nobody can do that. You know, if you do it, you probably got a lucky yes. You know, that's basically the bottom line. I've been doing this stuff for more than 50 years now, and only two times in my whole career did someone ever tell me in advance where the market was going to be trading at that time. Ruth Miller told me this in soybeans back in 1986, and 3 weeks ago, a friend of mine from across the pond who told me 2 years ago that the S&P would trade at 2075 into November, and that happened. That was the most amazing forecast that I've ever seen. So we'll have to wait and see, what happens with some of these markets. But it's hard to predict the future. What you want to do is focus on the present, because that's where you put your trades on, and that's where you focus on what your risk is, and that's the amazing pattern that we have. We have a question about the Canadian dollar, and since we've had so much of a move in currencies this week, I think it's really necessary to take a look at the Canadian, because that's one of the things that, that's good, this gold is really starting to take off. Hold on just a second. I happen to be long a little bit of gold, and that makes me quite happy. We are nearly there in the, we're just a few pips away. So we'll be able to see this unfold as we're going through this morning. Many of these currencies have already turned. The Canadian has been, and that is the New York Stock Exchange Index. I overlaid on top of that, of course, I have the Dow Jones Industrial Average. And if you'll notice in this chart, it shows the third divergence that we've had. We had one in July. We had one in September, and then we had another one just recently. And these divergences means that the Dow Jones is going higher, but not the overall stock market. And today, you can see that the New York Stock Exchange Index, can't even take out the previous day's high as of yet. It's still relatively early. But we've done that, of course, in the Dow and the S&P. But frankly, folks, this is telling us that the market is very, very weak, and it is, it's being masked by the Dow stocks and the NASDAQ and a few of the S&P stocks. That's pretty much what's happening. We have a question from one of our listeners here at TFNN about China. The Chinese yuan, the renminbi, is not traded in an active basis. It's still controlled by the Chinese government. It trades freely, of course, but you just don't get enough action in that to... I have never done a trade in it. When I first started going to China for the Merck back in 1997, the RMB was trading at 12, and now I believe it's around 6 and change. It's dropped about 50%, so that means it's 50% more expensive for me to go to China than it was 15 years ago. But that's neither here nor there. I'm sorry I can't answer that question more clearly, but it's not in my trading stable, so I really don't. I watch it occasionally, just in case there's something crazy happening, because they own so much of our treasury bonds that could be something that could happen, but that has not tipped its scale at any time. The same is true with the Russian ruble. The ruble has been in an absolute free fall recently over the past several weeks. Russia is in a great deal of trouble. The ruble is not only getting massacred, but the price of their oil, the price of the oil that they have has been breaking down, quite a bit. So what we have looking at us now is a potential here for a double bottom in oil. I have to agree with Basil today. Well, I agree with Basil all the time because he's a heck of a lot smarter than me. But the oil really looks good because, it looks less worse. Let's put it this way. We made a lower low today, and then we rallied up, and then the retracement stopped exactly at the 61% retracement, which was at 60.50 per barrel, which was the previous day's low. That sets up a really nice technical picture that if we can get oil above the $62 per barrel level, we could get a $4 or $5 rally. Now, if you look at the oil chart over the last 3 months, we've had about 7 $5 rallies in oil since, I think it goes back to July. And you'll see the market breaks, it rallies back 5 and then down again. Market breaks, rallies back 5 and down again. That's what it's been doing. So a $5 rally here would just take us back to $65 a barrel, which was where it broke down from after the $75 a barrel. So, make no mistake about it. The oil is in a downtrend. You have lower tops and lower bottoms, and it's certainly in a downtrend. Now, the natural gas that we posted in here a little earlier ago has a chance to make a triple bottom, a three drive pattern, and a double bottom if it gets about 10 cents lower. So we want to watch that because some of these energy stocks, energy components work together. Like gasoline is still making lower lows, heating oil is still making lower lows, so we don't get any help there. So we have to look at it on a shorter time frame to keep our risks really, really small. But it's much easier to trade crude oil than it is to trade the stock index futures. It trades much more perfect mathematically. It follows the patterns better, and I don't think the Federal Reserve's in there doing much in the crude oil market. That's just my guess. But it is really a terrific market to trade, and there's very little slippage on your orders. So it's a really good thing to trade. I highly recommend folks to take a look at that. So that's the main thing. Really, folks, we really haven't had any relief from the downtrend that we've had in some of these markets that we've been going down for so long. They just keep going lower and lower and lower, and so we are in a deflationary environment in some of these things, and so we have to be really careful to see that that we're not going to get into a deflationary recession, which the Federal Reserve is trying their darndest to keep us from doing that. So we'll see. We'll take a little break here. We got a really strong run in the market today, and gold has had a pretty good run today too. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got Rich Anderson on of Anderson Capital Management. Rich, are you there?
How you doing?
I'm doing good, my friend. What do you think of all this volatility?
We've got a lot of interesting things. You know, as you know, I'm a technical trader, but I'm aware of the macros around the world that may affect the markets I'm looking at. I mean, from China's slowing, and so therefore we'll probably get another rate cut or two. And every time you get those, they'll stimulate the markets. The strength in the dollar, you know, not on a daily basis, over the long term, is making all of our stuff more expensive to the world, whether it be cattle or soybeans or crude oil versus other countries. On the other hand, you've got other countries like Venezuela. Their debt is junk bond debt, and it's going for, I hear it's going for like 44 cents on the dollar. So if I'm a farmer down there and I have a good crop this year, it's sure going to be hard for me to sell when I know the minute my crop gets turned into the local currency, I'm losing 30, 40% of the value because the black market's the real market, you know, and the official market is just this thing that the government does. So I think we'll see, you know, weather is the key thing for the soybeans right now, and that's probably the big dog of the grain markets. And the weather in South America over the next 2 weeks looks pretty decent, but you're going to have to watch it into January and February. But if the weather continues good, they're going to have a bumper crop, and then there'll be big competition for us come
Rich,
March.
Someone's asked the question if there's a possibility of these currency wars happening, because we had a 500-point swing in the Japanese yen since Sunday,
Right.
and we're having some other wild swings. We had a 200-point swing in the euro today. I mean, this is ideal for what we like to look at. But you talk to some real serious people in this business. What's your take on it?
Well, I mean, they're all trying to stimulate their economies, right? And there's only one way to do that, and that's to be able to be price competitive. And the only way you can be price competitive is, for the most part, on a currency basis. So that's what they're trying to do in Japan. The Russian ruble's fallen like a rock because of other issues. It's an oil-based economy, and their oil-based economy, when Putin made his State of the Year address, it's based on $100 oil. A lot of these Middle Eastern countries, they need $70, $80, $90 barrel oil to be able to finance their programs, and it's not going to be there for a while, maybe for a lot longer than we think. Just like interest rates have stayed so much lower than what we ever thought they would for much longer than we thought they would, oil prices may end up staying relatively lower. You might see it bounce down towards 50, 55. I'm kind of leaning towards 55. But then, maybe be 65, 55 market for 2-3 years. That could happen, unless you get some kind of other outside influence. The rig counts are the high for the year was 1,930 oil and gas rigs, and it's down to 1,919 right now as of last Friday. But the permits are 35% less. So come middle of next year, some of these small towns in North Dakota or Texas, where they've had booms, you start having that many less rigs. That'll slow down all kinds of things, from the McDonald's to the hotels.
Yeah. We have a question from our friend Scott down in Florida. He asked about how do you factor in, Treasury notes and interest rates, when you're looking at, some of these things that you're hedging and stuff. Is that a factor anymore? The fact that it's at zero, or does that mean much? I know it has nothing to do with carrying charges anymore, but what's your feeling?
The interest rate differential is in the price parity model for currencies. When you're getting into the fundamental area, is what it used to be primarily used for in currency A versus currency B, depended on the difference between currency A's interest rates and currency B's interest rate. And that also had to do with their inflation and all that other stuff. But now we've got countries they're nothing compared to us. Is, like I'm thinking of Spain, on their unemployment, et cetera.
Yes.
And yet some of their interest rates are as low or lower than ours, and it makes no sense. And that's because everything's off the table. It's all about, fooling with your currency. And, the big dogs in the currency world are the governments. And they can make water run uphill for long periods of time. So it doesn't have the importance that it used to have, because, we're not in the real world. We're in a Fed ruled interest rate world in this country, and central bank interest rate ruled markets around the world. And so the distortions in the economic system are very dramatic.
Wow, that's really really quite crazy. We have
but keep in mind, I'm just a farmer from South Dakota, so.
Please don't start with me on that again. You're probably one of the few. People don't realize how sophisticated the farmers and hedgers are in that South Dakota area. Rich, I remember the time that we went down to your family's farm back in '85 or '86. It was really amazing how sophisticated these fellows were about what's happening in the futures markets and other commodity markets too. They do a terrific job, don't they?
Oh, it's amazing, and you almost have to be a computer scientist to run these combines nowadays, and all the yield checks, and when you're planting, it knows the number of kernels of corn you're dropping and the amount of fertilizer and all this other stuff that's going on. I thought one of the most interesting things about some of the yields we had last summer, we had awfully good yields in corn, where that we didn't get a whole lot of rain during the growing season. But the genetics on this seed corn is just absolutely amazing that we're able to produce those kinds of yields with relative limited amounts of rain during the growing season. I might add, we had the Corn Belt of the United States had almost perfect growing weather versus the worldwide. Our actual average temperature was the highest it's ever been.
Wow.
But in our producing area in the United States, it was great. And I noticed there's some flooding going to happen in San Francisco, I kind of heard on the radio.
Oh, that corn crop in San Francisco can always be a problem.
Well, I'm just thinking maybe there won't be quite as perfect a year next year. And so then the surpluses that we have can disappear quickly.
Rich, I always laugh about the San Francisco because when my daughter went to Berkeley, and when she was there, I was up there visiting her, and of course the old saying is the coldest winter that they ever experienced was the summer in San Francisco, and I always thought that was attributed to Ernest Hemingway, and of course my daughter, being as smart as she is, she said, no, Dad, she says, that was Mark Twain, Samuel Clemens, and I said, no, I said, I'll bet you $100, and sure enough, it was Mark Twain. But boy, I'll tell you, San Francisco can really get cold when that wind comes off the bay. That's the main thing.
I was going to Hawaii one time, and I'd never been to California. This was when I was much younger, never been to California, and going to Hawaii, so I didn't bring anything warm. It's August. I dang near froze in San Francisco. It does get
Rich,
awfully cold.
We got a technical question about corn from one of our favorite folks at TFNN, Mr. Z. He asked, what is the probabilities of corn going to 440 on the upside or 350 on the downside? Do you have a bias on that, or what's your feeling on where we stand right now? Because we're right in the middle of that range right now.
Right. I think my bias is for a high on Monday. Notice we made a high at 401 today. That's slightly higher than the 399 3/4 the other day, and I think the most recent high for the move back in October was 401 1/4. I could bring the chart up, but roughly, I'm just taking it from my memory. I'm kind of looking for kind of a cycle top on Monday. And I'm looking for us then to kind of work our way lower, probably into early February when we get the traditional February break, which very typically will come from the forum, the ag forum that they have in Washington, D.C., and it just seems like whenever the USDA has those ag forums in D.C. in February, they're always negative. So I'm thinking the lower will be hit before the higher. I'd be leaning towards the 350 rather than the 440. I mean, corn, one of the primary uses of corn is ethanol, right?
Yeah.
Has gasoline prices gone up or gone down?
Is this a trick question?
Yeah.
They've been going down. And we've got this huge quantity of corn. We had some technical difficulties with transportation, which we discussed last time. I'm thinking it'll revisit the lows before it goes any higher, and it would take significant weather concerns someplace in South America to drive it to 440. I could see us not getting above 440 even if we had weather concerns in South America. If we have them in the U.S. next summer, well then, pick a number. But I think we really are limited here for the near term, because ethanol is a big part of the usage of corn, and it's, crude oil, it hasn't stopped going down yet, probably will soon, or at least bounce, but it's not going to just completely reverse. It's going to stay down, and, that brings a good chunk of your yield of your corn is using it for ethanol, and I have a hard time being friendly. Okay, Rich, one other question's been asked is about what you're feeling on, gold and silver from these levels. We've had very little pullback since December 1st, which is highly unusual over a 10, 12-day period that we usually get some really good breaks, but the market just goes sideways. It just doesn't break at all. Is any indications that you're seeing from the contacts that you have?
I think, I'm your student, so you're the master, but I'm looking back on that December 1st range of $2 and we'll call it 65.5, 66 cents on the March silver. And some people would say, oh, wide ranges like that you just have to ignore. No, I think that the sellers were sold out, and it's telling you the next direction. The interest rates, let's say they do cut the interest rates a couple of times in China, which I expect to stimulate that. Everything's slowing down right now. Russia's going to slow down immensely. But who wants to own Venezuelan currency? Who wants to own Brazilian currency when the black market is so much different? Who wants to own the ruble? Indian sales of jewelry are up massively, 40, 50, 60%. And in many of those cultures, they carry their wealth, on their arms in forms of jewelry. I think we're just going to have that's going to be the reason, that we'll look back and say, oh, yeah, that was obvious why that was value as we look back. But technically, when you have a flush day, wash and rinse day like that, I think that's telling you something. I know Rick, our buddy Rick, I had a chat with him last week, and he's leaning towards the same thing. That, in fact, he wrote a couple of articles, very timely ones, when we were near the lows and on the lows on both the gold and silver. And while we could go back and retest them, probably won't retest all the way to the lows, but, we could at some point pull back into the 15.50, 15 and a quarter. I think it's going to work its way into a bottom, just like I think the crude oil. I'm kind of leaning towards $55. You'll be able to figure out the projections more precisely. They won't all bottom together, but over a period of the next 3 months, we'll have opportunities. I'm working on right now what my trades of the year are going to be for next year. Next time we're on, I'll chat about that. And the other thing to focus on, I think, is the rebalancing that'll occur in January. Things that have gone up, there'll be less of to be bought by the index funds, and things that have gone down, they'll buy more. And cattle happen to be one of those things that, while it's down quite a bit from where it was the last time we spoke, when you nailed it and said, look at that open interest drop, they're going down. And in the cash market, you saw the heavyweight cattle and the heavyweight feeders are both being discounted. In Sioux Falls yesterday, 85% of the fat cattle were heavy-weighted, and they were going for $1.58. They're really punishing the guy that's kept those cattle longer, and they were keeping them longer because the prices are so high. Why not keep them an extra week or two?
Oh, yes,
but
that's correct.
Now the trend has changed, and they're getting punished for that. Yeah. And then you've got 2 shortened weeks with the holidays coming. The Packers probably kill 4 days next week and 3 days the week after for Christmas. So they don't really need a lot of cattle until after the first of the year. And then you got that index roll between January 5th and the 9th that we talked about, and they're probably buying 15 to 20,000 contracts less because of the rebalancing just in cattle.
Well, it's amazing when those cattle went up, they made that 3-drive pattern as open interest was dropping, and that was the same thing that happened in silver and gold, back in when they were trading, back in 2011 when they were trading at $49 an ounce and 1932 in gold. The same thing was happening. It just means that buyers are leaving the market. So,
well, I mean, look at January feeders today are locked limit down. Cash market's $10, $12 higher.
Wow. Hey, Rich, thanks for joining us, buddy. We'll have you on in a week or so to talk about your trades of the year, okay?
All righty, sounds good. Take care.
Thanks, you, pal. Bye-bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Ladies and gentlemen, we have a special guest. Without further ado, from someplace in the southern hemisphere where it's warm, we have our friend Priceline Charlie. Are you on the air?
I'm on the air, Larry. It's nice to speak to you.
Well, I've been so worried about you. I've had the state police in Guadalajara and Chihuahua, Mexico looking for you, but evidently they couldn't find you. Are you okay?
Yes, whenever the police is looking for you, you better hide out because here you're going to disappear. You got to keep them as your friends.
Well, it used to be such a safe country. It's certainly not that way anymore. What can I do for you, my friend?
By the way, you were talking about currencies. I used to get 12.35 pesos to a dollar. Today, I got 14.1. Whenever I see 14 on the currency exchange, the stock market is going down next. I've seen it in 2007, 2008, and it went to 14. And when I saw 14, I go, oh, boy. So I'm expecting
those currencies are interlinked somewhat, that's for sure.
Yeah. Looking at Priceline, it went today below the 50. It's below the 100. It's below the 200, 100, and now the 50. It's doing like a retest of the 50 today. I'm looking to do a short at 11.29. Hasn't happened yet, I'm hoping. And hopefully it's heading down lower. What are your thoughts?
Well, the the price target that I posted into Tiger TV shows a beautiful ABCD pattern that sets up really nicely below $1,000 a share, right around $9.50 a share. So it looks to me like it's going lower. As you mentioned, we have a lower market because you have lower tops, lower bottoms. You're below all your significant moving averages. The 200 and the 50 and the 100 are all pointing down. So it's certainly in a downtrend. And the price target that I would be shooting for would be right around $9.40, $9.50 a share. That doesn't mean it can't rally $60, $70 from here, but you're looking at roughly $200 lower than where we are now. That's what it appears to look like.
Good.
Whoa. That's just my opinion, my friend. That's not written in stone anywhere.
Well, I look at it this way. I'm looking forward to it.
Well, that would be nice. You've certainly had it pegged all along, my friend. We started talking way back in August when you were selling that thing up around $1,300, and you were underwater about $20 at that time, and then the next time you came on the air, you were up about $60, and I have to say you held it all the way down to under $1,100 a share, which is one of the better moves of the year for 2014, and considering it was on the downside, it was even more amazing.
Mm-hmm.
So we're getting ready to have a big Christmas party at your house in Atlanta, so make sure you give me your address and phone number so I can alert everyone to come, okay?
I'm in La Paz, Mexico.
You dog. That's a beautiful place.
It's gorgeous here.
Oh, wow. That is a beautiful place. That's one of the more, well, there's a lot of beautiful places in Mexico, but that is one of the old favorite haunts of Humphrey Bogart. He used to go down there. In fact, he's got a restaurant that still has his name, I believe, in La Paz. But that's a beautiful area. The people are incredibly friendly, and there's very little crime in La Paz, but it's really a beautiful place.
That's very true. What you just said is exactly right. It's beautiful.
Yeah, it sure is.
Yep.
Well, listen, I want to wish you a very happy holiday, and I hope you call us back in soon when you get back. When are you coming back to the States, Charlie?
I probably come back in July.
Oh, wow. You're taking a nice long vacation. Well, enjoy yourself and hope to talk to you soon, okay?
Enjoy the holiday.
You bet. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.